Welcome back, everyone. I wish you and your loved ones a very happy new year. In today's video, we're diving into 4 exciting stocks that showcase the textbook definition of a perfect swing trade setup. Make sure to stick around because missing any of these could mean skipping over a money-making opportunity. Before we dive in, remember these stocks are best suited for short-term swing trades, mainly driven by technical charts with just a touch of fundamentals for added context. This isn't investment advice, just educational content. All right, let's kick things off with Cavco Industries Inc., a company operating in the consumer cyclical sector. Cavco is a small cap company with a market capitalization of above $3 billion. They specialize in the development of residential modular structures, things like manufactured homes, modular homes, park model RVs, and cabins. Cavco's revenue clocks in at a solid $1,850 million, generating of about $148 million. That's a profit margin of 8%. Pretty efficient for its scale, right? With an earnings per share EPS of $17.68 and a PE ratio of 25, the fundamentals reflect a steady performer. Oh, and just a heads up, Cavco doesn't offer any dividends, so keep that in mind when analyzing its broader appeal. Technical chart analysis. Now let's pull up the daily timeframe chart and take a closer look. On July 5th, 2024, the stock began a notable uptrend. Imagine a rising trend line connecting the stock's higher lows. This line is like the stock's invisible springboard, propelling price movements upward. Currently, the stock is just about 2% above its uptrend support. And here's the kicker. If the stock holds steady at this trend line, it could spark a short-term rally. Hypothetically, if you enter at the current market price, your downside risk is limited to just 2%, a very manageable cushion. Now, here's the exciting part. If the stock resumes its uptrend and retests its recent high, it offers a potential upside of 24%. Yeah, 24%. That's a risk-to-reward ratio of about 1 to 12, a swing trader's dream setup. But, and this is a big but, if the price breaks below the $435 mark and closes there, the setup goes bad for the long side. That would open the door to short-selling opportunities. So keep an eye on that trend line. It's the key to this trade. Keep Cavco Industries on your watch list. If it respects the trend line, we might just see a short-term rally worth riding. The stock market features over 4,000 companies, making daily tracking a significant challenge. As a programmer balancing a 9-to-5 job, I've spent the past year developing a system to identify stocks at critical levels, ensuring focus is on the right opportunities at the right time, instead of repeatedly monitoring the same stocks in our watch lists, which often leads to impatience and poor decisions. I'm excited to share this with you, so don't forget to subscribe to my channel. All right, moving on to our next pick, Acco Brands Corporation. This company is part of the industrial sector and falls into the small cap category with a market capitalization of just above $470 million. Acco is all about office, school, and calendar products, along with some computer and electronic accessories. They operate across North America, Europe, the Middle East, Africa, and even parts of Asia Pacific. Financially, it's been a tough ride. The company posted a loss of $181 million on sales of about $1,700 million, leading to a negative profit margin of 10%. It's worth noting their dividend yield is 5.73%, which could appeal to income-focused investors. All right, let's talk about the charts. On August 5th, 2024, Acco started an uptrend that's still visible today. Like Cavco, this uptrend is anchored by a rising trend line, a key support level connecting higher lows on the chart. As of now, the stock is trading about 2% above this support. If the trend line holds, we could see a short-term rally take shape. Assuming an entry at today's price, the downside risk, if the trend line fails, is capped at about 2%. On the flip side, the stock has the potential to climb up and retest its recent high, offering a 20% upside. That's a favorable risk-to-reward ratio of about 1 to 10. But here's the critical point. If the stock breaks below the $5.10 level and closes there, the long trade setup becomes invalid. At that point, it might become a solid candidate for short selling. Keep Acco Brands on your radar and monitor its movement around that crucial trend line. If the stock respects the line, the upside potential could be well worth it. Remember that magic stock you saw in a YouTube video, the one that promised to 10x in no time but ended up dropping 30%? To me, making such outlandish claims feels dishonest, and I don't indulge in them. Here, you'll find only real, straightforward insights based on what the charts truly reveal. I won't promise skyrocketing returns because no one can. My goal is to help you identify stocks at key levels that, supported by solid technical analysis, have a genuine chance of making a move. All right, our third stock is Peapack-Gladstone Financial Corporation, part of the financial sector. This is a small cap company with a market capitalization of above $550 million. Peapack-Gladstone provides private banking services, including loan and deposit products and asset management services for businesses, nonprofits, and individuals. It operates primarily in the United States. Financially, the company reported revenue of about $398 million and an income of approximately $32 million, yielding a profit margin of 8%. With an EPS of $1.82 and a PE ratio of 17, the fundamentals are solid for a company of its scale. They also offer a modest dividend yield of 0.62%. Now, let's take a close look at the daily chart. On July 9th, 2024, this stock began a clear uptrend. The rising trend line connecting the higher lows has been a dependable support level, providing structure to the stock's price movements. Currently, Peapack-Gladstone is trading about 1% above this trend line. Here's why this is important. The closer the price is to the trend line, the more attractive the entry point becomes, minimizing your risk. Entering at the current level keeps the downside risk capped at around 1%, while the upside potential, if the stock retests its recent high, is a strong 18%. This gives you a stellar risk-to-reward ratio of 1 to 18. However, if the stock breaks below $31.50 and closes there, the long setup is invalidated. At that point, it might turn into an excellent candidate for short selling opportunities. So what's the plan? Watch the stock closely as it approaches its trend line. If it holds, this could be a prime swing trade setup to capitalize on. Last but not least, let's talk about AZEK Company Inc., another industrial sector player. AZEK is a mid-cap company with a market capitalization of about $6 billion. They manufacture outdoor living products like decking, railing, trim, and lockers, with operations primarily in the United States. From a financial perspective, AZEK generated revenue of about $1.4 billion and an income of $153 million. That's a profit margin of 10%. The company has an EPS of $1.04 and a PE ratio of 46. All right, let's unpack AZEK's daily chart. On August 7th, 2024, the stock began its uptrend, and this trend line has consistently connected the higher lows. These uptrends act as a trampoline, springing the stock higher with each bounce off the support line. At the moment, the stock is trading about 2% above this key support. This proximity to the trend line makes it an attractive entry point. Assuming the stock holds this level, we could see a short-term rally that tests the recent highs. The upside potential is about 16%, while the downside risk, if the stock falls below the trend line, is just 2%. That sets up a risk-to-reward ratio of 1 to 8. Now, here's the red flag. If the stock breaks below $47.20 and closes there, the long trade setup falls apart. In that case, this stock would transition into a solid option for short selling opportunities. So keep an eye on this trend line. If the stock respects it, AZEK could be a great short-term play with a clear roadmap for managing risk and reward. All right, folks, that wraps up today's stock picks. As always, the stocks discussed today are for educational purposes only. If you found value in this video, don't forget to like, subscribe, and hit that notification bell to stay updated on the latest swing trade opportunities. Take care, trade smart, and I'll see you in the next video.